Hello everyone, doing a new video. Just wanted to answer some questions that I've been getting quite a lot of through Facebook and via email. I'm in Malaysia right now and I am doing a fair bit of traveling until the end of the year, so I apologize if I'm not able to answer questions quickly. You might be hearing a lot of noise in the background. I'm at a resort in Malaysia and I think there's a concert or something on tomorrow or the day after, and these guys are testing out their sound stuff, so I'm sitting in the balcony. Okay, so on your screen you're able to see some things that I'm going to be addressing today. Let's start off with the EMA6 strategy. I've been getting a lot of questions in regards to that. Now, that's one of the strategies that I do use at times. I possibly only right now do 3 or 4 of those trades every week. This is a simple strategy. It's been tried and tested. There are going to be multiple opportunities throughout the day that you can take these trades, so you don't have to rush them. I want to run you through again the criteria that I would use. It's simply because I think a lot of people are confused about it. I'm getting a lot of similar questions that I think I have addressed in the other video, but I'll try and do it again. Okay, so the EMA6 strategy basically is either I do it for over 2 minutes. You can actually do this over 2 minutes, 3 minutes, 5 minutes. You can even use a 5-minute chart and do it take the trade for 10 minutes. You can use higher time frames. I haven't tested that, but I have had people who have tried it and it's been successful for them. Now, once again, I say this, you possibly will find maybe 20, 30 possible opportunities over a few hour period over multiple currency pairs if you do look for it. That doesn't mean that every single one of those opportunities is going to be a winning trade. What it means is that you will have opportunities there, so you don't have to rush trades. You also don't have to chase trades. So what I want you to do is to listen very carefully to the following, write this criteria down, and then go about demoing a couple of hundred of these until you've got the full intuitive know-how of taking maybe 2 or 3 very comfortable trades throughout the day. Okay, here's the other thing. If you are able to spread your trading over a few hours, you don't have to take these one after the other. You can actually take a safe one, and then if the market's not looking great, then wait a little while and see, watch TV or do something else whilst you've got the charts open, and see if another opportunity presents itself. Okay, so here's the thing, and I think this is where some people are going wrong. Never go against the trend. So if you're going to, let's quickly jump over here. Now, if you're going to look at a chart, look at it from the left of the screen to the right of the screen. Okay, generally speaking, this is a 1-minute chart. Generally speaking, this is a downtrend. Okay, so it starts off at the top here, goes down here. Now, what I would not do when I'm looking at this is take a call on this. I will always do a put on a downtrend. I would also only consider doing calls on an uptrend. This is where I think people make a mistake, because they look at this, for example, they will look at this. This is a green candle. I've had some people do this. They'll look at this little green doji and they'll say, hey, this is a harami and it's going to be a call from here. No, this is not a harami. Okay, technically speaking, a harami is having a few of these candles like this, so a few green candles, and then you have a red doji, so this would be considered a bearish harami. Okay, have a look again. There's 3 green consecutive candles followed by a red doji with a long wick up here and a long shadow down here. What this generally means, actually let me get rid of this line here. Okay, we'll leave it there, it's not moving. Generally speaking, what this means is that the market's been going up, and then there's been a bit of a battle between the bears and the bulls. So the bears have won out in this case, and this signifies that there's a possibility of a market reversal happening. Now, listen carefully. My choice of words here was there's a possibility of a market reversal happening. keep in mind, guys, the market is what is in charge here. It's not always going to do what we want it to do. What we're trying to do with our trading strategies is to figure out what the market wants to do. So I'm literally trying to get inside the mind of the market and figure out if this is exactly what it wants to do. And I will only do what the market wants to do. Okay, that's what we're trying to do here. So all of this, candlestick charts and patterns, technical analysis patterns, when we're utilizing different types of strategies and different indicators like the EMA6, stochastics, or RSIs, all of these things are there as tools to help us figure out what the market is trying to do. Now, I'll try and give this example to everyone. The market is see it like a living person. Whether it's your husband, your wife, your partner, everything has a personality. So does the market, and also the different currency pairs have a personality. When someone is pissed off, you would tend to kind of veer away from them, let them be, because they're not going to be behaving normally. The market is exactly the same. When the market, for example, right now with my Euro USD strategy, the market's really not behaving in the same way, simply because there's a lot of going on. There's a lot of issues going on in Europe, so it's going to naturally affect the euro. And so the euro is upset. And when it's upset, it's going to stop behaving in the normal way that it should, or the normal way that it normally does. So in those circumstances, we start realizing that, hey, if it's upset, it's not going to behave the normal way. Hence, the strategy that we've got there is not going to work in the same way. So what you've really got to do is get into the mind of the market, start looking at the way it behaves in different situations. So again, when there's a lot of news, when there's issues happening in Europe, or presently with all the election stuff happening in the United States, have a look at how the US dollar behaves, and how different currency pairs like the JPY with the US dollar, or how the euro behaves, or how the Australian dollar behaves with the US dollar. Also, if you're able to jump online and watch your CNBC or Bloomberg or whatever business related websites you can go to, or even investing.com, and check out some of the news on there, and see if something happens or someone says something, and then you watch the market and see how it reacts. That's like the market's temperament, the market's personality. There are patterns hidden away in all of this, and some of the most successful traders, whether it be forex, whether it be stock traders, whether it be binary, some of the most successful traders in the world, they follow, especially when it comes to technical analysis, they follow patterns, not just on the 1 minute chart. They will zoom out into hourly charts or 4-hour charts, or even daily charts, and they'll have a look at what the market has been doing over the term, and how the market responds to different fundamentals. So politics in different regions of the world, politics in different countries specifically, or different issues that kind of arise, natural disasters, or terrorist threats, or whatever it may be. Have a look at that. Once you get a good grasp of the personality of the market, and you start knowing how the market ticks and how it thinks, trading is going to become much easier for you, because you kind of just know. And you know, again, with your partner, for example, if you know your partner's not a morning person, you kind of veer away from them in the mornings. Every morning for the market starts off with the Asian session. Asian session has low volume in it, generally speaking. So most people and most strategies, you look at it this way: the market is not a morning thing. Some people certainly do enjoy a slower movement, and they'll do longer term trades on that. Other people will possibly just hate it because the market's not moving as quickly as it would when the London session is happening, or when the New York session is open. So these are some things that you really need to start to understand. And I've said it in multiple videos, you really need to start seeing this as a business, become more patient, start looking at the charts, becoming friends with it. In the longer term, this is going to pay you a lot of money. So here's the key thing, guys: slow down. Okay, I've also been getting emails from people, and I'm lost in some of those emails, because to me it looks like people are trying to overcomplicate the strategy, overcomplicate trading. Simplify it as much as possible, and this is part of the reason why I've worked this strategy, in particular the 2-minute strategy with the EMA6, simply because it's simple. It doesn't take a whole lot for us to understand. I've also said this in previous videos, and I'm going to say this again. You're not trying to become a professional trader. All you're trying to do right now is to learn how to take a couple of really good trades, not just good, a couple of really good trades with 2 or 3 really amazing setups every day. That's all you're going to do, and I guarantee you this, guys. I do exactly the same thing right now. You can make really good money with it. Okay, take myself as inspiration if you want to. I don't hold a day job. This is what I do, and this is my lifestyle now, and I get to travel. I'm on 3 months holiday right now. Been traveling through Bali in Malaysia right now, heading off to India for roughly about 6 weeks, and I won't be back in Sydney until Christmas. You can live that lifestyle as well, and it doesn't take. You don't need to make hundreds of thousands of dollars to be able to do that. You just need to be able to take 2 or 3 really good trades, build up. Some people have been asking about brokers. I haven't put that in. I'll address that now. Find a broker that is to some degree regulated in your country. Okay, I've found a few of them in Australia that are registered with our regulatory body, ASIC. So we're a little bit more secure in my trades. That doesn't mean that I don't hold accounts with European brokers. There are a few that I have, well, not a few, I've got about roughly 10 accounts. So there are a number that I'm holding some cash with. I've got strategies for that. And my strategies basically are, I don't do too many trades with my European brokers. I will try and make a few $1,000s in each one every month, and I'll withdraw just a few $1,000s from each one every month. That way I still maintain being under the radar, but look at it this way: if I'm withdrawing $2,000 or $3,000 US from each of, say, 5 or 6 brokers every month, that adds up, right? What would you do with $10,000 US every month? And that's achievable just by doing 2 or 3 trades daily. Now, the goal isn't to just do $20, $25 trades a day. The goal is to master this strategy, know how to pick 2 or 3 really good setups, and then eventually take a $1,000 trade every day. And once you're really confident, you can and once you've built up your balance a little bit, even like a $5,000 trade every day. So at that point, you really only need to take one trade. And I've said this to people. In most countries, the US dollar converted is amazing. So imagine just doing one $1,000 trade every day. That's roughly about $700 US return. Make it extremely simple for yourself. Okay, if you're complicating it and you're having trouble understanding some of this, it means you've made it too complicated. Simplify it. Okay, so let's get back to the strategy. The first thing you do, confirm your trend. Again, look at your screen from the left going towards the right, and make sure if it's going from up to low, generally speaking, you have a downtrend. If it's going from bottom to top, generally speaking, you have a uptrend. Okay, I wouldn't look at it over multiple hours. I'll just look at it, whatever's in front of my screen right now. That makes sense to me. Next thing you do is, on a Hekin Ashi setup, you're going to wait for a harami. These guys are not haramis. Now, in my previous video, I know I've taken some trades where I haven't been perfect haramis. The reason for that has simply been, I now, because I've done so many trades, I now trade intuitively. So I will look at certain setups, I will look at confusion in the market and say, yep, the market is somewhat confused here, and I will just take a trade, if it's suitable for me. But for you guys, I want you to be as technically correct with your criteria as possible, and this is whilst you're learning. Because as you build up your 200 or 100 or 200 demo trades, you will also become an intuitive trader with this strategy. Okay. The other thing to note, I've been hearing this way too often. Every single one of you, does not matter how advanced a trader you are, how much experience you have, with any new strategy that you take on board, you need to go back to demoing and demo them. Okay, demo at least 50 to 100 of them if you're an experienced trader. This is essential because every strategy works. You know, with my experience, I've noticed every strategy works. It's just in order to make it work, you need to have a very strict criteria. The other thing to note is that with the strict criteria, you need to be able to feel right about it, because trading is not just a hey, here's a criteria, follow it, and you're going to win. There's a lot of intuitive work involved in this as well. It's just how I trade. And I find that it makes it so much easier for me because I've got more confidence in taking the trade. I'm not sitting there biting my nails when I'm taking the trade, because there's a feeling that comes from within. And a lot of that feeling has to do with a lot of experience. That's why demoing as much as possible is essential. Now, something I said to someone today, I still demo trade. If I do my 2 or 3 trades a day live, if I see opportunities later on, I still demo trade, because I want to maintain being able to take lots and lots of demo trades. Hold on a sec, guys. I hope you guys can't hear the noise in the background. Okay, so back to the criteria. Wait for the harami to happen. And once again, harami is basically 2 or 3 candles of one color, followed by a doji of the other color. Now, some of you have been asking me what a doji is. This is a doji. I would consider this to be a doji. Okay. Now, don't get lost with my setup here. I've got multiple EMAs on my screen. That's simply because I'm testing out different methods to make it even more simpler, to make it even more secure. The yellow one is my EMA6. I have the purple one is my EMA14. Now, one of the things that you can do is study the behavior between the EMA6 and the EMA14. Once again, the EMA is, or the EMA6 is just a calculation of the previous 6 candles. Okay, EMA14 is a calculation of the previous 14 candles. The blue one is the EMA20, calculation of the previous 20 candles. Okay. The reason why I use a 6, because I'm trying to get a hold of market movements sooner, and hence that gives us more opportunities. If you were to use just the 14, for example, which is part of the original strategy, then you possibly might be missing a few opportunities. Now, have a look at this, guys. You see the market going down. See this? A lot of people would consider this and look at this and say, hey, this is a doji. It is a doji. You could a tiny one, but have a look at what the EMAs are doing. Now, with these here, I would pay very close attention to it. It's a very strong downtrend. Okay, even this is a very strong downtrend. When you start seeing candles behaving like this, that means it's likely that the market has hit its bottom and it's preparing to turn around for a bit. Okay, you want to see more of these, not just one like this. Once again, this is all about taking really safe trades. It's not about just seeing one setup happen and say, I'm going to jump into this. You don't want to. The other thing that I want to see is, when I see a harami set up like this, I want these candles to be larger and move quicker. If these candles are tiny, see even this here, this is not an EMA6 cross. Even when the EMA6 crosses here and I'm looking at the behavior of this candle, that's a pretty long shadow. I tend to avoid that trade. Also, here, this isn't big enough for me. I look at that, to me it just seems like the market is still confused. It's not ready to go down yet. So I would avoid those trades, and you'd realize here, market's jumping back up again. Also note, some people have asked me, when you see candles, these are still Hekin Ashi ones, when you see candles with massive wicks on top of them, or shadows when it comes to the red candles, what you want to take note of is that the market is still to some degree uncertain. Don't take the trade. Okay, you really want to see a lot of movement here. The reason why I've got these multiple EMAs there is I'm trying to figure out also how to best help you guys determine whether the market is ideal to take a trade or not. Okay, when I'm looking at this, all of them bunching up together, there's a good chance to say, hey, well, the market to some degree is going sideways, avoid a trade. And if you want, and if you know how to add more EMAs, experiment with it. Okay. When you see this happening and then moving apart, that's a very strong trend downward. So I would consider only doing puts here. No calls. Here, certainly, you see this, you see this. Yes, there's a chance that I mean, even if I didn't know this, I'd look at this and say, hey, I may consider it. What I would generally do is see this happen, and then I jump onto a candlestick chart. Now, most people don't do that yet, and this is where they get losses. Okay, another thing to note here, Hekin Ashi present strike is different to candlestick present strikes. The reason is what it's doing is a calculation at the present moment. It's calculating high, low, open, close, all of that sort of stuff. So you're not always going to get the right strike price using a Hekin Ashi candle. And a lot of people who are just using Hekin Ashi setups, what they're finding is that when they jump onto their broker page, the spread is so far different, and especially when they're executing a trade, they're getting something else, and they usually end up either winning by a couple of micro pips or losing the trade entirely. Okay, you want to be using, guys, a candlestick chart. So look for the setup on a Hekin Ashi chart, then jump onto a candlestick chart to look at what the candle really is doing. And I guarantee you this, most of the time you're going to notice. Now just look at this, guys. Look at here. When you look at a Hekin Ashi chart, all you're seeing is a whole heap of red candles and then one tiny little green doji there. You go into a candlestick chart, and that same setup there is a full green candle followed by a tiny green stickman. See that? It differs. So what you want to do as soon as you see a setup on a Hekin Ashi candle is, on a Hekin Ashi chart, is to jump onto a candlestick chart and have a look at what the market is doing. Okay, so in this case, I will have a look at this. The EMA6 would have crossed on this. After all of this, you see a big green candle. Chances are the market is reversing again. Someone actually emailed me and made a suggestion, and I think this person has had some success with it, is where they've said they've added stochastics to the list of indicators, and with it, what they do is if they're here somewhere and they see a big green candle coming along, they'll check to see if the stochastics are oversold, and if it is, then for them that's an added confirmation that there's a chance that the market is heading back up again. So I assume, I haven't asked this person, but I'm thinking she's doing longer term trades, so that would be possibly a 5-minute trade as opposed to just a 2-minute trade. The other thing to note, guys, is have a look at all the trades that you're doing on demo, even some of the losses. Take note of whether they would have won if you did a 3-minute trade or a 5-minute trade, okay, instead of just a 2-minute trade. Because some people have found, I had one person who contacted me and said they were losing a whole bunch of 2-minute trades, but they realized when they went on to 5-minute trades that those would have all been winners. It's simply because, look, there's a lot of variables that go on when we're trading. Our trading style, our mindset during trading, our personalities are different, the time of day, even the weather, guys. I realize I trade differently when it's hot and when it's cold, or when I'm just really comfortable. Right now I'm sitting on my balcony here in Malaysia, and it's reasonably humid right now. I'm really not in the mood to trade, so I'm doing this video, but I wouldn't be doing any trades right now. Okay, let's have a look at this. See how the market's going down. So, and notice how we're not seeing a harami here. We wouldn't have a clue what's going on here. So I'm jumping back into a Hekin Ashi setup, and see, look at this. I'm noticing a harami. 3 green candles followed by a red doji, and then I'm taking note of what's going on here. Now, this to me looks at this stage like a possible setup. Okay. Now notice how this is a long shadow on the end. Most people have asked me, when you see this cross happening, it has to be through the body, has to be going in the direction of the trade that I want to take. I will then quickly jump onto my candlestick chart, and I'm starting to see this. Now, most likely the EMA6 would have been either on this candle or on this candle. Okay, I think it most likely would have been in this candle. What I would do is take a look at what's going on here. So, you know, some people have asked me how much time do I reasonably have. Well, I think you have probably about 30 seconds to decipher if this is a good trade for you or not. Okay, so what I would do, let me just jump in again and draw in a line. And you can also do this free stock chart. See this vertical line here? You can draw in a line here so that when I go onto my candlestick chart, it shows me which candle I would have been jumping onto. Now, when I'm looking at this, on the 58th second of this candle, I would have most likely jumped into a trade. Let me get rid of this so we can have a look at the wick. Okay. Now, what I would have done, guys, is this. See this shadow here? I would have been paying very close attention to what's going on with this this bottom part here. If this was down and it was bouncing up, and I will notice, say, in the last 10 seconds this is bouncing, I wouldn't take the trade. It's extremely important. This is where you have to get to know this intuitively. I would not take the trade if this is bouncing. And the reason for that is, if that's bouncing, then I know that there's a battle going on between the bears and the bulls, and that could result in me possibly losing the trade. So if this would have pulled up, then have a look at what's going on here now. If I entered somewhere around here, 2 minutes, I probably would have just won. Okay, and this would have been down to the second. 3 minutes, notice what's going on. So this would be 1, 2, 3 minutes. The market's coming back down again. And this is where you really have to play around with whatever time frame you're comfortable with. Okay, some people, again, they'll look at this setup and they'll say, hey, I'm only comfortable doing 5-minute trades. Okay, know that this is most likely going to happen. Sometimes you'll see this bounce up here and then the market comes down again. Initially, when I started doing this, I had some losing trades because of that. So get comfortable with whatever time period that you want to work with. So let's jump back onto the Hekin Ashi setup and see what it looked like. Okay, so here is where we would have most likely executed a trade. We don't know what the strike price would have been. Okay, but chances are on a 2-minute trade, this would have been a very close one. On a 3-minute trade, you would have just won this one. On a 4-minute trade, this is what's going on. Guys, this is what I want to see. See how candles move, the size of them? See how quickly they're moving? That's what I want to see. If I'm just looking at slow movement here, I don't want to take those trades. I want quick movement. I want big movements, big candles like this. What this means to me is that the market is way down there somewhere, and I'm comfortably up here somewhere. I don't want to be in a situation where I've just taken a trade here and the market's up here somewhere, and I'm hoping to the universe that this somehow falls down again. So presently speaking, if we would have taken this trade, we would have been here, actually lower, and well, let's remove that. Where we'd like to be is at the very top of this. Now, some people have asked me, Shiva, why do you take the trade on the 57th, 58th second? It's simply because I want to be at the very top or the very bottom of the next candle. Okay, so if it's going to be a red candle, I want to be at the very, very, very top of that one. Simply because I need that candle or the next candle to completely flip on me in order for me to lose that trade. Especially if it's a long candle like this. See how if I'm at the very top of this needs to be a big green candle in order for me to lose. Okay, so look at this, guys. 1, 2, 3, 4, 5. Okay, we have another 15 seconds roughly to go, and this would have been a great winning trade on a 5-minute trade. So play around with it. On a 2-minute one, this would have won, but it would have been a close one. 3-minute one, definitely would have won. 5-minute one, this is a definite win. So play around with it. Note down your the trades you take and play around with the different time frames and see which ones are better for you. Okay, now let's go back to this. So I would encourage you guys to watch the behavior of the EMA6 and the 14. See if they're further apart, if they're closer together. Like I said earlier here, if they're very, very close together, like this, going sideways, you don't want to be taking those trades. The market's going sideways. Okay, you want some degree of movement. Next thing, wait for the EMA to cross the candle after the harami. So when you see a harami setup like this, you're waiting for the EMA to cross the body of the candle. Okay. The other thing I'd like to note is you want this candle to be a big one. If it's a tiny candle or it's just crossing the bottom or just the top of it, if it's a green candle, possibly avoid the trade. Okay, I'd like it to be very comfortably in the body of the trade. So I mean something like this, it's very comfortably in the body of the trade. And if this second candle was moving down nicely, I'd possibly consider doing the trade on this one. The other question that I've had, does it have to be on the very next candle after the doji? No, it doesn't. I'd like to have it on the first few after the doji, simply because I don't know how far the market's going to move. Notice how I've also added Bollinger Bands. The specs for the Bollinger Bands are, I'll show you. Standard period is 20, standard deviation is 3. Okay. The reason why I've got standard deviation of 3 is because if any of these candles were to break outside of it, chances are, unless it's trending, if it's trending, avoid it, but chances are, if it's just an all of a sudden breakout, meaning to say both corners of the bottom or both corners of the top have to be firmly outside of it. This is an outside, this also is an outside. When you see that, there's a possibility of a trade in the reverse, meaning to say you can do if it's on a 1 minute chart, you can do a 60-second trade going reverse. Okay, but thing to note, it has to be, both corners have to be firmly outside of the Bollinger Band, so it breaks it, and then you can take a trade in the opposite direction. That's just a 60-second strategy that you can utilize. Okay, so I take note of the placement of candles around the Bollinger Bands. If it's upper Bollinger, chances are you've got a better chance of the price action bringing price down again, so you're able to comfortably do a put. If it's in the middle somewhere, forget about it. Okay, if it's in the middle somewhere here, I wouldn't be taking the trade. I'd want it to be somewhere comfortably up or somewhere comfortably at the bottom. And sure, you can apply stochastics or RSI. Well, I wouldn't technically use RSI, but you can use stochastics with this to just add a layer of confirmation for your trades. Yeah, play around with it, guys. Play around with it. Make it your own. Next thing, and I have mentioned this, when you jump onto your candlestick chart, watch the behavior of the candle. So look at the bottom part. Yeah, look at this candle here. This possibly, if I was to do something around here, I'd watch to see if this is just moving down frantically, up and down, up and down. I'd avoid the trade because the market isn't sure, so how am I going to be sure of what's going on? Okay. If you can see the screen, please write this down. And then yes, take the trade on the 58th second of the candle on which the EMA6 crosses. So you would, going back here, the cross would be happening here on this candle, and you might even consider it on this. So you would take the trade, I would probably do it on this one. Take the trade on the 58th second. Okay, so you're watching it from the start on a candlestick chart. You've got your broker page open somewhere around here as well. You can set it up. You've got the Euro USD pair or whatever currency pair is up there, and then you do a click depending on how your broker execute. Some of my European ones, certainly the ones with the spot option set up, I click on it to be ready for it, so all I have to do is confirm when I'm ready to execute, and usually that takes 2 seconds, so that's the reason why I'm jumping in at the 58th second mark. Okay. Now, trade duration, this is what we were talking about here. Play around with it, because sometimes you'll find, especially for those of you that are not comfortable with short-term trades, each one of us is different. We have different risk profiles as well. When you're trading, you want to be comfortable with your trades, okay? You want to be confident with your trades. If a 2-minute trade is causing you to be nervous and anxious, just play around with higher time frames, because that might be better for you. And also, as we found here, a 2-minute trade would have been a close one. A 3 or a 5-minute trade would have been an amazing one. Okay, let's have a look at what's going on here. Jump back onto the Hekin Ashi setup, and guys, I do not see a harami here. Okay, nothing here to me suggests that the market's moving up. Now look at this as well. EMA6 is bending, but it's in the wick. There is no harami here. So again, comfortably, I would just avoid the trade. Okay, I've got this AUD USD setup here. This is a Hekin Ashi setup right now. This is what I meant by stochastics. You can go into add indicator, and there's a whole heap of stuff here. You can go down to stochastics here, add that, make sure it's not in the body, and play around with it. So again, if it's below down here, that means the market is oversold. Keep in mind, this is a lagging indicator. That doesn't necessarily mean just because it's here, market's going to bounce back. At some point it will. It can just hang around here for hours if it wants to. So it's just something that gives you an added indication. You're looking for the cross here to happen, and if the cross happens and they pull away, chances are that market is head in that direction. So those are some of the things that you can play around with. Certainly, once again, play around with the duration. That will help significantly. Let's go back here. Okay, now demoing, I have mentioned this before, guys. With every strategy, go ahead and demo until you are so super confident you know this strategy like the back of your hand. Okay. Now there will be webinars and live trading sessions happening possibly sometime in 2016. The reason why I haven't done any of that yet, one, I don't really want the responsibility for it. And two, kind of, the reason why I'm trading is because I kind of want to be free. I want to free to kind of just live the way I want to live and trade wherever I want to. Now, if I was to do some of this stuff, then I'd have to fix myself to a specific routine, which I'm trying to avoid right now. But at some point in the future, I think I will just set up a Facebook page, and you guys can all just join on there. Right now, I'm on my personal page. So you guys can possibly join like a one that we can set up just for trading, and if I'm ever doing webinars and live trading and stuff, we can just do it via that. And yep, so I will let you guys know there's possibly going to be a video or something explaining that. And yeah, and mind you, it's all going to be free. I'm not really looking at charging anyone for anything. How to learn trading, a lot of people have been asking me this. Just jump onto YouTube, type in price action, type in support and resistance trading, also type in technical analysis patterns. There is a ton of that is gold. That's literally gold. If you can start to teach yourself technical analysis patterns, give it a month or two, study it well, you'd really be starting making a lot of money, because that's really where professional traders sit. I think that's what differentiates everyday normal day traders to professional traders that are extremely successful. Okay, so you can type that in onto YouTube, watch as many of these videos as you potentially can, but keep in mind, keep it simple. Pick things up certainly that resonate with you, that make sense to you. Let go of really heavy technical stuff that makes no sense to you, because that's only going to cause you to lose money. It's going to confuse you even more. Okay. Now, once again, what's coming in 2016? There may be a chance of doing webinars and live trading and things like that. I'm not, again, at this stage, I'm not really looking at charging anyone, but certainly if anyone wants to, donations and things are welcome. I am looking at, after having been to Bali as well, different causes in which I'd like to be donating more money. I'm sponsoring kids through school and things like that. There are so many children in Bali, because their parents can't afford it, where they have to jump out of school, and I think it's only about $30–40 a month where they get education and all of that. So there's, I think, Bali Children's Project. It's an organization that I met with when I was in Bali. organizations like that I want to work with. And eventually, if I do trade copiers and things like that, which I am thinking about in 2016, there might be a monthly charge or something along those lines that will entirely go towards charity and causes. So not only will you be learning and making great money, but you'll also know that you're really helping out underprivileged kids to achieve something in life. There's also possibly the chance of establishing a fund or something that I'm trading that literally is just focused at going money through binary options and forex, going towards 100% funding these charities. Some of them are doing amazing work. What else is there? I did mention about a blog that I was going to put together. I haven't gotten around to it. I think I'm just lazy and on holidays permanently. But there will be a blog, because one of the things that I've discovered over the years with all the experience through Forex and being a financial advisor and stuff, as I mentioned, there are patterns to everything. So there will be a free blog that I will eventually write up that will share whatever's in my book as well, whatever's in my head in regards to patterns and behaviors that you want to understand, in particular to do with commodities like gold and silver. That's extremely important. You can make a lot of money out of that. And in the meantime, certainly observe patterns yourself and write them down. Write things down, because eventually you're gonna find that there are very specific patterns that exist, and if you can see them and understand them, you can make a lot of money out of it. The last thing I wanted to mention is beware of scams. Look, I know under my YouTube videos there's a lot of people posting a lot of crappy stuff with the email addresses and all sorts of links to different programs. Now I try and delete some of this every day. Sometimes I think a week ago there was 171 of these that I had to get rid of. These people are scammers. Don't reply to them. Don't email them. Think about it this way: if these people are making real, genuine money, they wouldn't be posting their email addresses under other people's YouTube videos to try and get you to respond to them. They'd be creating videos and giving their information away for free. Okay? Generally speaking, how it works is they'll say, I've got this amazing strategy. What you need to do is sign up through a link to one of my brokers. They will pick up $250 out of that, and that's how they make money. Or they'll say, hey, I've got this amazing strategy, it's only going to be about $750, whatever. Some people have been scammed. Don't do that. Common sense applies, guys. Again, if they're making good money, why would they need to be scamming you? Also, there has been someone that I've noticed, this surprised me. I was sitting in a restaurant here in Malaysia having lunch, and I received an email that said it came from Shiva Krishnan, and it had my own logo, the one that I've got on my YouTube video. It had that as well, and I was shocked to see where they had created an email address with Shiva Krishnan autotrade@gmail.com, and they were encouraging someone to email them and said, I've got a great system, and I'm pretty sure it would have been something that involved money. Look, I don't have Shiva Krishnan autotrade@gmail.com. That's not my email address. That other account is not mine. So if anyone ever says to you that they are Shiva Krishnan and they're asking you for money or asking you to sign up under a broker link or anything along those lines, that's not me. Okay? Please don't be scammed by anyone using my name. I wouldn't be doing any of that. If anything is happening, you will see it through one of my videos. Okay? And maybe later on, if I set up a blog, then it'll be something official on the blog itself. So again, I'm not selling anything. I'm not asking you to join through brokers. Do not be scammed by anyone using my name or pretending to be me. Okay? For the time being, I think that's it. I'm heading off to India in a couple of days. So once again, guys, depending on how things are over there, I might not have access to the internet every day. So please bear with me if I'm slow on responding to emails or Facebook messages and things like that. Okay, signing off now. All the best to all of you.